says that assessed income minus income as determined under 143A, 143(1)A. What is my assessed income? What is my assessed income? I just want an answer from you. What is my assessed income? My assessed income is nil. I cannot say my assessed income is 15 lakhs is because this set off of losses under section 74. Section 74 is a part of the Income Tax Act, and therefore for the purpose of computing my final total income, I need to claim a set off of this brought forward losses. So my assessed income is nil. My return income is also nil. There is no difference between these two figures at all. So whether this will be considered, it will not be considered as an under-reporting of income. To my mind, answer is no. This can be considered as an under-reporting of income is because the word income is defined under section 2. And if you read the definition provision of section 2, it says that several terms have been defined, including the word income and a total income. Total income, it says that total income computed in accordance with the provisions of the Act, which will include section 74, under which I claim a set off. But the initial words of section 2, it says that unless the context otherwise requires. And here to my mind, the context in which the penal provisions are applicable requires some other meaning to the word income. And according to me, the word income should be considered here as an income before setting of the losses brought forward from earlier years, and therefore if that interpretation is applicable, there are some circulars also of CBDT which in some other provision it clarifies that you can't interpret the word income always in this fashion, is because if the context otherwise requires, you have to interpret the term income differently as per the need of that particular provision. So this is how we are going to compute the under-reported income. Second step. Third step, we are more concerned with this is because we need to understand that though additions and disallowances have been made, is there any way out? Okay, I am talking about official way outs. So there is a subsection 6 which gives us some benefits. It says that if your case falls into any of these 5 categories, in that case, that particular amount, though it has been added, it will not be considered as an under-reporting of income. What are these 5 cases? The first one is bona fide. And this term bona fide, Supreme Court is also struggling to understand and interpret this term bona fide. So I don't know how the assessing officer will understand and interpret this term bona fide. It says that if the assessee has offered an explanation for which the addition was made, there was further disclosure of all material facts to substantiate that explanation, and more particularly, more important, that authority, I mean assessing officer, should be satisfied about the bona fide. So the third condition is the most dangerous condition. Okay, it is possible to satisfy the first 2 conditions, but how to satisfy the third condition, I cannot answer that particular question. So I can give you an example that if there was an expenditure which I have incurred and which I felt that it is a revenue expenditure, assessing officer says that sorry, I don't doubt the incurrence of your expenditure, but according to me, it's a capital expenditure, it's not a revenue expenditure, I can't allow you a deduction. And he is citing some court decision, I am also citing some court decision, but he is rejecting my claim. This is a fit case of a bona fide. It's because it was under my bona fide belief, relying upon some court decision, I claimed it to be and revenue expenditure which was not accepted by the assessing officer, and therefore it cannot be considered as an under-reporting of income. Second one, if there was an estimation which was involved in the addition or disallowances which were made, which was because of the method of accounting which I followed, was in opinion of the assessing officer was not the correct method of accounting. So let me give you an example instead of discussing this theoretically. Is for example in case of real estate contract, I am following project completion method, whereas assessing officer says that is no more a correct method. Without going into the dispute of that, let's assume that assessing officer is correct. And assessing officer wants to impose percentage of completion method, and therefore he is rejecting my books of account. He is not doubting anything else. Now since I prepared my books of accounts on the project completion method, from my books of account he will not be able to correctly compute my income. He will be estimating what is the percentage which you have completed and what should have been your income. So it's a fit case that there is an estimation which was involved merely because my method of accounting is not acceptable to the officer and he is of the opinion that some different method of accounting should have been followed. The third one, this is more relevant. Once again there is an estimation which is involved. Now what has happened here is, once again I'll give you an example. Most of the times what we do is that if we come across a case of a client where some personal expenses or a possibility of personal expenses being involved. The best example is motor car running and expenses and depreciation etc. Invariably जब assessment होता है 20%, 30%, 50% they straight disallow. Okay, so here what it says that as an assessee, when you file your return, when you compute your income, you have estimated some disallowances. So for example, I am offering that 10% of my car expenses I am going to disallow because on the ground that there is a possibility of personal element being involved, which I am doing on my own. And assessing officer says that no, sorry, it should not have been 10%, but it should have been 50%. There is just a variation in the percentage of estimation. In such a case, it will not be considered as an under-reporting of income at all. No penalty can be levied by the assessing officer. So it is better always in such cases. Even if you estimate not 10% but even 1%, technically penalty is not applicable. It's because it says that you need to estimate the amount of additional disallowances, howsoever small it may be. But if the estimated percentage has been changed by the assessing officer, it will not trigger under reporting of income at all. The last two, the next one is TP adjustment. I'll not go into the details of this. And the last one is undisclosed income, for which search penalty is applicable under 271 AAB. So these are cases of exclusions. Please note that there is a negative list. It's an assessee who is supposed to prove that my case falls in this exclusion. Now the next one, before I go to the tax, computation of tax on the balance amount of under-reporting of income, let me tell you that, let me first try to explain what is a misreporting of income, because the percentage of penalty will vary depending upon whether it's an under-reporting or misreporting, which I already clarified. So we have subsection 9. It exhaustively lists out that these are the 6 cases in which it will be considered that the person has misreported his income. The first such case, if there is a misrepresentation or suppression of facts by the assessee, this will be considered as a misreporting of income. So for example, bogus purchases, there is a misrepresentation of the facts. You are claiming that you purchased from that party and that party is denying. For example, penny stock transactions, there is a misrepresentation of the facts. You claim long-term capital gain is exempt, whereas it is not the case. Or any such other cases wherever there are such misrepresentation or suppression of the facts. The second one is non-recording of investments in the books of account. Now to my mind, it's a total failure in considering this as a misreporting, is because if there is an investment which I have made, and if I have not recorded that investment in my books of account, that will be added under section 69 on the ground that it is from unexplained sources. If it has been added under 69, the correct penal provision applicable are 271 AAC and not 270A. And therefore in that second case, this section itself is not applicable. Forget about misreporting of income. But what will happen there? Since I am touching upon that aspect, let me tell you that